A new report states that President Trump's tariffs have not hurt the economy as much as expected. Hello, and thanks for joining us for this week's Fastest 4 Minutes in Finance. I'm Scott Inman. The report from the International Monetary Fund predicts the U.S. economy will grow 2% in 2025, slightly better than expected. And that number is still lower than predictions that were in January, prior to the president's April announcement of monster global tariffs. The IMF projects that the U.S. gross domestic product will grow 2% in 2025 and 2.1% in 2026. That's up from the 1.8% projection that the IMF made in April, but lower than the 2.7% prediction made in January. Now, the IMF report also states the inflation rate will continue to fall over the next 2 years, and inflation risk was central to the case that tariffs would wreck the economy. That seems to be easing as well. Of course, the main reason tariffs have not hurt the economy as much as many economists feared back in April is that the administration has struck trade deals that have lowered the original tariff threat. It also doesn't mean that the tariff risk is gone. Trade tension could still impact the global economy if companies decide to pass on more of the tariff cost to their customers. The bottom line here is that the IMF report follows what is a strong consensus that the U.S. economy is still growing, but that the pace of growth is slowing, and there are downside risks. Now, we should always expect market volatility, but even more so as the direction of the economy becomes more uncertain. Mixed economic data will drive the market up or down on any given day, but that should not frighten us. It's the price we pay for long-term growth. Your equity investments should always be positioned for the long term. Trying to time the market to sweep all your gains before the next bear market is a fool's errand. History shows us that staying invested improves returns over the long term. Now, if you are nearing or in retirement, it is also key to stick to your plan. Your strategy for income should include a diversified portfolio that takes current income from conservative investments while staying invested in equities for future income.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.